Fantastic. Thank you so much for joining us this morning if you are on the West Coast, and good afternoon if you are on the East Coast, and good evening if you are in Israel or anywhere else around the world. My name is Sharon Vanek. I'm the Executive Director of the California-Israel Chamber of Commerce. For those of you who do not know, the CICC, the California-Israel Chamber of Commerce, is a non-profit organization which is based in California. I am broadcasting from San Francisco. And our mission is to support Israeli-based and Israel-related companies, entities, and so on with their business relations here in California. We are doing the same for our friends here in California, and we support their activities in Israel and with everything which is related to Israel. Before we start this session today, I would like to mention that this session is being recorded, and everything that is being said today is not of a consulting, but this is the view of our speakers. I'm so happy to have some friends around here with me this morning. I thank you, Tushar, thank you, Erik, Hilik, and Sid for joining me for this discussion about cybersecurity beyond, 2020, COVID-19, and what's going on. The last time we all met was around RSA, and we gave predictions for this year, what will be of interest. But we didn't expect COVID-19 to change our life. So I want to hand the mic to Sid. Sid Trivedi is the partner with Foundation Capital, who is going to lead this discussion. So Sid, why don't you take the lead and also introduce our speakers today?
Thanks so much, Aaron. Thank you so much to everybody for joining. Good morning, good afternoon, good evening, wherever you are. This is a very interesting panel. Firstly, given, it's in my case, the first panel that I'm doing since RSA. So it's a lot of fun to be out here, 2.5 months later. I did not expect it to be virtual. I did not expect to be holding a coffee while I'm talking to each of you. And I didn't expect not to be able to see attendees. So it's a very, very interesting situation that we're all living in. And we are all adjusting to the current paradigm that we have. So as Sharon mentioned, we're going to be talking about the impact of the pandemic on cybersecurity. And we'll touch on a number of different topics. I'll give my investor viewpoint. Hilik and Erik will talk about the customer viewpoint, and Tushar will talk about the founder viewpoint. And through it all, we'll be able to touch on a number of topics. And we're hoping to take about an hour in this time. And we will leave some time at the end for questions. If you do want to ask questions, you can simply put it in the chat bar, and Sharon and myself will look through it and try to ask as many questions as we can with the time that we have. So a very quick overview on me and where I am. My name is Sid Trivedi. I'm one of the partners at Foundation Capital. We're an early stage venture firm. We've been around since 1995, so 25 years of operations. And we've been lucky as a result of that to live through some past economic disparities. And we're very cognizant. And one thing that I think if you ask any of our partners, we would say is that we will get through this. And we feel very comfortable that innovation will continue even after the pandemic resides. As a firm, we invest in 4 big categories: enterprise software, where I spend all of my time, consumer, fintech, and frontier tech. And on the enterprise side, I lead a ton of our investing efforts around security and IT. And there are a couple of topics that we're going to touch on. And before I ask questions of the panelists here, I'll briefly talk about the investor viewpoint. A lot of things have happened since mid-March when we were put into shelter in place and across the world, including out here in the Bay Area where we reside. And we have offices in Palo Alto and San Francisco. We thought about deals and how we looked at opportunities in 3 big buckets. First, our opportunities where there was already heavy diligence happening pre-shelter in place. And in most cases, those investments, we went through their whole process. And we made a number of investments, and we decided not to make investments. But generally, we made those decisions regardless of the fact that we were in lockdown. The second thing, the second type of opportunity that we were considering was one around looking at companies where at least myself or one of my partners had met with the founder in person pre-lockdown. And those processes, again, we've been pretty comfortable in doing. The last bucket has been the toughest, which is companies where none of us have met any of the founders ever before. So it's a completely virtual diligence process. You know, it's been tough for the last few weeks to get comfortable with doing that. We have, in the last 3 weeks, become more and more comfortable at doing those types of investments. We've actually, you know, presented 2 term sheets in that space. One of those we decided ultimately not to be able to get to the finish line on, principally due to valuation. Another one that I actually just executed end of last week, I'm feeling more and more comfortable that we'll get to a closure on that by the end of, you know, today, hopefully, potentially tomorrow. So that would be the first deal that we would have done where none of us had met the founders. We won't get that opportunity before we make an investment. So we feel very comfortable that now we're going to get through this. And generally, venture firms, particularly in the Bay Area, are getting more and more comfortable with doing this. Now, obviously, we're all hoping to go back into the workplace, and eventually we will get there. But we do feel more comfortable than ever before that we can invest in these strategies, even without being able to meet founders. And we'll talk more about this. And obviously, if you have questions, please push it to the chat bar, and we'll try to bring as many of them as we can. But now I want to kind of turn over to the panelists. We have 3 fantastic panelists. Before I start getting into details on questions, I'm going to ask each of them to briefly introduce themselves and tell us a little bit about what they do. So maybe let's start with Hilik. Hilik, why don't you go ahead?
Thanks, Sid. So I'm Hilik Kotler. I'm the global CISO of FICO. Over 20 years in the cyber field, from the Israeli NSA, the 8200 unit, to establish my own startup company called Promisec, which I managed to sell in 2011. Then I became the global CISO of MDocs, 4 billion in revenues, another traded company. And 3 years ago, I joined FICO in our transition to the cloud. I'm currently managing end-to-end CISO organization, corporate business product, and looking forward for the next 45 minutes.
Thank you, Hilik. Tushar, why don't you go ahead?
Yeah, hi, thanks, Sid, and good morning, good afternoon, and good evening to everyone. Great to connect with all of you. My name is Tushar Kothari. I'm CEO of a company called Attivo Networks. We are primarily focused on detecting lateral movement and insider threat at endpoint inside the network data center as well as in the cloud. So we participate in 3 different market segments. You know, for example, on the endpoint, we start where the EDRs leave off. And likewise, inside the networks, we complement IDS, IPS, and then in the cloud. Very interesting times, obviously. We have about 200 employees across the world, and all of them are working from home. I'm the only one who comes to office to just make sure somebody receives the shipment in the mail. But it's really working out really well. I mean, I thought that I needed my team to be in the office to debate and argue and agree or disagree. I can now do that extremely well over Zoom. I have my Zoom lighting, Zoom camera, everything all set up. So it's really very interesting times. But the other thing I noticed is that the productivity of my team has really gone up because they're not spending time commuting. And when you are on a Zoom call or video conference like that, you're very focused. So I find this exciting times, and we are, as a team, focusing on innovating and working harder. And we think this kind of transition or situation leads to great opportunities, and we see that happening every day in our business.
Thanks, Tushar. And Erik, why don't you go as last but not least?
Thank you very much, Sid. Hello to everyone. Thank you very much for joining us on the call today. It says my internet connection is unstable, so I'm hoping that's not causing an issue with being heard. But I've been at Intuit almost 7 years. I'm in charge of security engineering. security operations, third-party security, and adversary management. And so looking forward to speaking with you today.
Thanks, Erik. So let's get started with the first question, and let's keep it with Erik. Erik, Intuit, and we've talked about this in past discussions on a number of other panels, but Intuit is well known for being an early adopter of the cloud, and particularly the strategy around moving to 100% AWS infrastructure. When you think about large cloud environments, do you think that that companies that have these environments get a leg up in managing the current shelter-in-place environment? And do you think that the pandemic is going to speed up this transition for Fortune 2000s to move from on-prem infrastructure to this hybrid cloud strategy that Intuit has been already working on for years?
It's a very interesting question, and certainly in light of COVID, I would say that companies that have moved to the cloud actually are at an advantage in that space. One, you can scale up, but you can also scale down. But the reality of it is that, we also went heavily SaaS at the same time. So almost all of our support systems are also in the cloud. And so the ability to work remotely, all of the systems we had in place because of our move to the cloud, made it a very seamless transition to work from home. And so from our experience, I would say it is a huge advantage. And it's been a validation of our business model. We get a lot out of moving to the cloud. I would say, we sold our data center, our last data center last year, and we're just turning out the lights, if you will. There's a few last applications, primarily in the billing space, that were last to move. But those will be in shortly, within 2 months, and then essentially we'll be completely 100% in the cloud. And so from my perspective, I think the trend will accelerate because of this. Everyone's using Zoom, everyone is using virtual collaborative tools. All of those things are, advantages and are going to be taken advantage of the system. And I know we're going to talk about it later, but clearly supporting work from home is not going to end really quickly. And I think if nothing else, it's also provided an advantage in how we think about human capital, in the sense of we don't necessarily have to, our two largest locations are San Diego and Mountain View. And so we were limited and constrained with who we could hire, with those that are willing to, live with or move to live within, striking distance of those two locations. And I think we're, as a company, a whole lot more interested in world-class talent, that even if they aren't willing to move to those two regions.
And Erik, do you think that this transition from on-prem to hybrid is going to happen during shelter-in-place, or do you think most of this will speed up after IT and security leaders start moving their teams back into the office?
I think it will. I don't think it will wait. The reality is that, Tushar, you mentioned it, your productivity has actually increased. I think most people are finding they have more hours in the day without the commute. They have more hours in the day. We don't get to get out of our chairs as much as we would like. And it's easy just to continue to work continuously. But what I would say is that the folks that are seeing the advantages that are in the cloud, I think aren't going to wait. I think everyone is hoping, as we gradually open back up, that they're configured in a way to emerge from this pandemic stronger, and more able to take advantage of the firming market conditions as things start to open up again.
Got it. Super helpful. And we'll talk a little bit about opening up in later questions. Hilik, maybe on your side, you mentioned in your introduction that you've been both a founder and a two-time CISO now, two public companies. For founders, this is a tough time. It's a big shock to the system. There's a question as to what happens next. And if I was a founder, and I know many founders have asked me this question, they've said, hey, well, are there going to be certain emerging areas in cybersecurity that are going to be benefited from this impact? And what are customers thinking about? What are those areas? So maybe talk a little bit more about what are the areas that you think are going to, in cybersecurity and on the innovation side, where you do see opportunity.
So this is Let's see if I'm on mute. No, I'm not on mute. So this is a very good question, Sid. I think, just to echo what Erik said earlier, we do see companies pushing harder in their cloud-first initiative, and remote workforce is already a fact. So I can think of a few emerging areas in cybersecurity that are going to benefit from the impact. The first one that come into my mind is everything around SD-WAN and zero trust. You see today, Erik is talking about increasing productivity. The Intuit is a company that is all cloud, right? We still have so many sectors that in order to use their email, they need to browse through Citrix. So I do see companies, going faster to the cloud. I do see the need to replace, the old-fashioned VPN technologies. So no doubt that the zero trust that will allow seamless and easier to manage accessibility of business application to remote workforce and have better control over your remote endpoints will be big. If it hasn't been so far, it will get a real push forward. The second, I don't know if this is something new, but identity platform. We saw the transition of multi-factor, the Oktas of the world. I do think that those companies or the newer technologies that will enable federating identities, give better authentication for employees, partner and customers accessing application system and devices will rise. We do need better, simpler way for admins to deploy and maintain identities. We need better provisioning. We need better automation in this area. There is another place where, and this is a fact, you see an increasing attempts from cyber criminals now leveraging the shelter in place, the fact that people are now working from home, and if you look at I guess all the alerting systems across companies, you see an increase. You see much higher volume in certain areas. I do see, security orchestration tools that are allowing better automation and response into alerts and incidents, going faster, that will allow better handle of increasing alerts and standardized alerts treatment. This is something that I see, in my place, that we are heavily investing since the shelter in place began. I assume everything around cloud. So not necessarily, companies will move faster now to provide their services to the cloud, because this is a bigger transition, this is a transformation. But companies that will decide to start maybe developing in the cloud, storing more data in the cloud, I do see here the need to have better cloud security and compliance orchestration tools. And this is also something that I hear more and more investors are coming with some candidates to push their threat intelligence platform. Again, you need to be very early in complete understanding on what you are facing, integrating TIP platforms into your analytics platforms is a key in the new era. So this is another thing that I predict will move faster. And one thing that becomes interesting from where I sit, DLP is also something that I hear a lot of CISOs in the last few months starting to rethink again about their data leakage prevention strategy. You know, and not necessarily against cyber criminals, but also, you know, trying to figure out a better way to handle some insider threats. So that's another key area that might rise again due to the pandemic.
Yeah, those are some fantastic points, and I agree with all of them. I think, you know, there's this opportunity for zero trust to replace VPN. There's an opportunity around cloud security. There is definitely a lot of work that needs to be done with automation in the SOC layer, which is broadly in orchestration. I think your point around identity and what that means is a big question mark. And I think your last point on DLP, the only one thing I would add that I'm starting to hear more and more about from the customer network is this point around how do we manage human security? And that question was always there, and obviously it was the theme of this year's RSA conference, but it's becoming even more relevant as all of our employees are in their homes, where they're connected to, you know, public Wi-Fi, and they're able to click on whatever links they want on their corporate network, not recognizing that, you know, that you might be clicking on fish links. So there's clearly, you know, an opportunity there. So I think you touched on a number of big points. You know, now I want to kind of get the founder and operator perspective. So I'll turn to you, Tushar. You know, the question that most founders have is, it was really, really bad for the last 9 weeks for me. And I think if they were here asking a question to you, my guess is they would have a question around, well, you know, Tushar, you have over 200 employees, you're at a growth stage. Was it the same for you? So maybe I'll be more specific there, but give us a snippet around how life has been like from mid-March, when the Bay Area, where you're based, instituted the lockdown until now. And tell us a little bit about how Q1 results went off. Were they on plan? Were they off plan? And then what your expectations are in terms of revenue for 2020 and then beyond in 2021.
Yeah, so a couple of quick things. So first of all, obviously, world has changed and we are now remote and so on. But so is our customers. So, you know, not only our employees are remote, but the customers are remote. And, you know, it seems that we are continuing to get customer meetings. I thought that, you know, without the, you know, old model was we would, you know, set an appointment and have the salesperson visit the customer or some sort of meeting. Now, of course, it's all moved to online, and it seems some of our customers are also a little bit more organized. They have scheduled meetings, and, you know, it's a Zoom call, so they show up on time, and there's allocated time. So we have a good opportunity to articulate what we do and so on. We were in a growth stage, like you mentioned, so we were seeing tremendous traction, and you know, particularly with this new world we are in, the boundaries have completely changed or gone away, right? I mean, instead of having one door to your office, now you have hundreds of doors because all the employees are remote. So the idea of the fence is kind of gone, and you need more stronger detection capabilities inside the network, which is where we play. So there's a lot of resonance. And some of the new innovations that we recently introduced, like what we do for protecting Active Directory and essentially, you know, taking away the attacker's ability to observe what's around them on the endpoint with our new technologies is really resonating well. We had a very good Q1, fortunately, and we were ahead of the plan. We are ahead of the plan as of right now. But I'm sure we'll see some changes in the second half because, you know, our customers' businesses are affected. Like some of them are just fundamentally not doing well. And so we won't know until the world opens back up and see what the real impact is. But, you know, overall, we are kind of optimistic and we are continuing to invest in this phase. We think that's, you know, all these investments we are making and this focus with which we are doing that is going to enable us to come out at the other end very, very strong. So it's a mix of changes and a lot of opportunities.
So it seems like if I was to summarize, Q1 went off well.
Yes.
Questions as to what that means for the rest of the year. and it's looking like new meetings are happening again. Did new meetings stop at any given point at the beginning of this lockdown, or do you feel like they continued on?
They kind of continued on, but what has happened is that we had a lot of opportunities which were in the late stage of the pipelines and somewhere in the procurement. A lot of, particularly outside of US, some of those got stalled because they had to just shut the offices, and some of those organizations were not designed to work remotely. These are the old industrial, companies and so on. So their procurement departments, all that took a while to get back online and get them functioning with the remote, setups and all that. So it took we lost, I think, a month or two in that sales cycle. But as far as opportunity and the pipeline building, that has continued. So I'm sure there's some disruption because, their company's internal processes are delayed and so on. But, everybody's more focused. There is no, you don't take a Zoom meeting just to chit chat. You take the meeting if you really want to discuss something and, you're ready to consider something very seriously. So we see a lot of action on that front.
And what about 2021? You didn't mention how next year looks.
Yeah, so next year, of course, nobody knows, but I think we come out very strong. I think there's already some pent-up demand and a lot of projects have been delayed, and the companies who are not impacted financially have a lot of opportunity. We have some segment of our customers who are, fundamentally not affected. So they are just going to have projects that need to be released. There's other section of our customers who have significant or some financial impact, and they're going to prioritize what they can afford to do and all that. Fortunately, we are in the security space, so that's a priority, and particularly as the digitization progresses, security is becoming even more important. So, while some customers will fall out of the pipeline, we think some more will come in. So 2021, I'm optimistic would be a very good year for us and for the industry.
Awesome. I saw a chat question come in, which is relevant here, which is, somebody asked, can you talk a little bit about the investor approach to what, Tushar is just talking about? What do you think, Sid? It's a great question. So maybe I'll put it with some context. People like Hilik and Erik, I talked to about 150 CISOs, CTOs, and CIOs of principally Fortune 1000 companies. And in the last, give or take, 9 weeks, I've talked to about 40 of them. These are regular conversations, but I've turned those regular conversations into pandemic-related conversations. I think largely what Tushar is saying is correct. So any deals that customers were thinking about, deciding to execute on pre-pandemic, they've generally, run their course in terms of deciding whether to buy the product or not. And the reason for that is we're unlucky and lucky, but the lucky part about cybersecurity is that sales processes are generally long. So if you've been engaging with a customer and you've done a pretty long POC, and that's taken you 3, 4, maybe 6 months, the likelihood of you now deciding not to do it because of a big pandemic event is lower. It's not zero, but it's lower. The other advantage that we have with cybersecurity, which Tushar touched on, is that it is actually a need area. We are very, very lucky that as companies are being impacted by the shelter-in-place across the world, they're actually moving to these virtual environments. And now if you're doing commerce in a digital format, protecting that commerce is completely different. The same way that you might have protected stores, physical retail stores, you need to now protect your website, which is why the roles that Erik and Hilik lead in their respective organizations are becoming even more important now than ever before. And that's allowing people like Tushar and other founders to be able to get the opportunity to go and sell to them. So, generally what's happened is Q1 results ended up, somewhere between 50% to 100%, a little bit more. Obviously, Tushar was lucky to actually beat his plan. But generally, they were in the 50 to 100% range of what was planned, which is very different to our consumer companies, where suddenly you saw a massive shock in the environment. And going forward, the way that I would suggest that founders look at 2020 is usually we used to have this strategy in early stage investing, which is that you want to try to triple your revenues on a yearly basis. That is obviously changing. I believe that if you double your revenue as an early stage company by the end of this year, you will be in a very favorable position. There will be a number of companies that end up seeing revenue flat, and there might be some that see a decrease. And the reason for that is because although the buyers will continue to have their budgets, they're now shifting their budgets to be able to focus on areas that matter. And Hilik talked a little bit about those, and obviously Erik talked about the impact on cloud. So if you are not focused on cloud security, it ends up having a negative impact here. And that's a huge opportunity. In terms of 2021, I agree with Tushar. It's very, very hard to say. We as, and hopefully I'm not lost. I can see my video is frozen, but hopefully I'm not, my voice is still going on. As investors, we're very bullish. And as a result of that, you know, my general thought is that the 2021, you know, pipe will end up being very positive. There will be a ton of buyer interest. I was lucky that I lived in Singapore during the SARS epidemic, and I saw the impact of that. It was a lot lower than, you know, than this one. This is obviously a global pandemic. But if I look at just some of the learnings there, I don't expect something like this to last for the long term. Ultimately, as humans, we will go back to living our lives. Yes, we will learn a lot from this, but I do believe that we will, you know, be able to move back. So, you know, with that, I want to kind of turn the same question over to Erik and Hilik to answer, and I'll pose it in a slightly different way. You know, Erik and Hilik, maybe talk a little bit about how buyer behavior is going to change as a result of this pandemic. And I'm going to specify this to being buyer behavior amongst large enterprise businesses like the ones that you lead, Fortune 2000 companies. And specifically, do you think that customers are more likely to invest capital or buy products with early stage startups, or do you think they will end up focusing on these large vendors given, you know, everything that's going on with the economy?
So Sid, who do you want to go first?
Go ahead.
Okay, I'll do a little bit in that space. What I would say is, you know, all I can speak is for our behavior, right? And so we are very much a build only if we can't buy shop. And so therefore I'll answer your second question, which is if a startup has what we need, we're very likely to continue to buy from them. Right. In other words, it's the edge cases, the new areas. We very much support early stage companies, and I don't see that changing. You know, our business has been impacted by COVID-19. You know, obviously our tax business got extended, mostly just moved a quarter. Right. So we think the revenue will still come in that space, but, you know, our small businesses are hurting, the ones that are using QuickBooks and QuickBooks Online. And so, you know, it hasn't had an impact on our business. We think that will return. But, you know, it's one of the areas of the company that is, you know, very, very important. And so the investment is level as opposed to increasing in the cybersecurity space. But at least it's not declining. And that's not universally true in other companies. So I think I don't think we're going to shift to moving to more established companies except ones that we already have. And we're always willing to look at new startups. We actually spend a lot of our time looking at new innovation and partnering with you, Sid, and with other VCs, others that are leading us and giving us access to early stage companies that are very innovative in their approach. So again, I think in the consumer space, it's going to be different, right? Where their businesses have taken a real hit. You know, ours is a hit that we think we can withstand and come out stronger.
I completely agree with Erik. I will try to touch another angle. You know, and this is exactly where we are in the midst of the pandemic. You know, shelter in place still in most of the world, at least to some extent. Eventually, you know, when you look at you know, the security organization strategy is derived from the business initiative and also the threat landscape, the cyber threat landscape. If you look at most companies today, you know, I think, you know, companies strategically are a little bit more cautious, you know, regardless security, you know, calculating, you know, their moves, their investments. I see companies take less adventures, you know, not strategically going to change it, but at least for time being, you know, for the next few months up until, you know, the economy is more stable and you feel that you can predict, you know, that your next quarter much better. You know, I think security eventually is attached to the company strategy. So by design, if you know, let me give an example. If the company was supposed to build now a platform on Kubernetes that security needed to support this direction, regardless startups or elephants, you know, this will be deferred, you know, because there is no need right now to do those things. In 3 months, most probably, you know, post-pandemic, a certain normality will be reintroduced. Things will get back to normal, but there is some kind of reprioritization. So that's one aspect of the game. The second one is shelter in place did introduce some challenges delivering some projects that are a little bit more complex, multi-divisional, you know, that you need much better collaboration. And while companies today are trying to focus on the existing, I see less willingness to invest now heavily in things that, you know, in part of taking less risk, in things that are by design much more time consuming, resource intensive, etc. So this actually brings, I think, a great opportunity for startups, because usually startups, you know, are being blamed being not enterprise ready. They don't have from the get-go all the integration points to the great, you know, IT, you know, orchestration tools, DevOps orchestration tools, etc., etc. You know, I'm a big fan these days on, you know, buying solutions that can address existing threats which are maybe not strategic but can really harm the business. Maybe they cannot be part of my overall strategy at this point, but they do solve the problem. And I think startups can really introduce this notion across the board, you know, bringing smart, innovative, current solutions to real problems in a very easy way to consume and implement. So I think eventually solutions, regardless startups or elephants, that are easier to implement, that are cloud first, have cloud first approach in terms of, you know, where, you know, the fact that you don't need now to implement, deploy, do so many dancing around the deployment, will have some edge over the others.
Very helpful. You know, one other question that came up while Erik, you and Hilik were speaking is around POC processes. You know, if a POC process took X amount of time, is that time now increasing as a result of the pandemic? I'd love for both of you to briefly answer that topic.
I wouldn't say that it's taking longer per se. You know, it really depends on the pilot. If we had a pilot that was going while we were actually on site still, and it continued into the shelter in place, you know, it just continued for the same amount of time. Having said that, right, if there's a lot of go back and forth, right, you know, get in a room, and write on the whiteboard and brainstorm, I can't say that that is easier in the new environment. But we've just had to adapt our tooling, right? And how we think about those things. So virtual whiteboards, the ability to actually write up documents and capture things differently than we did before, where it was a lot more verbal interaction. A lot of it is now more exchanging documents. And then having a meeting to discuss and go through in real time. And we also like a lot of the collaborative tools. We've gone heavily into the G Suite. And so we have, collaborative documents where, multiple disciplinary teams, multi-departmental, sometimes including the outside vendor, we collaborate on a document that represents our shared understanding. So I don't think for us, it's not taking longer.
Hilik?
Yeah, I don't think it takes longer, but I think, we cannot look at it as a siloed, project. Every project now is being monitored carefully, whether we would like to pursue with this service solution, application, etc., or, we would like to put it aside and maybe even introduce something that we didn't have in the pipeline because there is a need due to where we are. I don't think it will take longer, but everything is being reevaluated right now for relevancy. What I can say is that nothing is off the table. Nothing that was already in pilot, in POC, or in discussion that we had a path forward. I don't think it will be vanished. Most probably some will be deferred because eventually companies didn't change their strategy, or again, especially, where I am, we are not now starting to sell vegetables, and we will get to where we were aiming for before if we are, we continue to do everything already, but I think pushing forward will be the key here, and the reprioritization in some cases.
Thank you, both.
Yes, Sid, if I can add to that. So from my side, we've seen our customers, most of our POCs move to cloud-based and in the cloud. And a lot of times we just set up a virtual environment for the customer to come and test what they want to test. So in a way, it's become more efficient than before. And I think that's going to remain with us. We, in fact, develop some more tools and capabilities so that we can conduct the entire POC on a virtual basis. And that's, actually improving our productivity.
Yeah, it's a fantastic point. And I know Erik mentioned it as well, which is, the ability to have this cloud product ends up being incredibly helpful, because if you do need to go on site, it becomes very tough to go on site right now with shelter in place into a customer's data center. So, now I do want to turn things around a little bit. I'll go back to you, Tushar. For some founders, this is their first, big recessionary environment that they have been a CEO at. And you've been lucky, you've been a senior operator in the early days at Cisco, as well as at Juniper. And you've gone through the last two recessions, early 2000, as well as obviously 2000. What advice do you have for founders, who are going through this the first time, or maybe the last time they did it, they forgot what happened back then, and what strategies they might have implemented? Talk a little bit about, how you are managing Attivo in the current world, where you're investing, where you're actually spending more money than you were before, where you're spending less money, how you're thinking about things like cash burn and future fundraisings and potentially layoffs. And generally, if you do have perspectives from other founders, it would also be helpful.
Yeah, no, I completely agree. Thanks, Sid. So very important for anybody who's running a startup. Is different than, of course, my days at Cisco and other places. Life was a lot more easier there. Here, I got to make sure that we don't run out of cash. And the thing about what I learned in the last 6-7 years of being CEO of Attivo Networks is that if you need money, it's not a good time to raise money, because nobody wants to give you money when you go ask for it. And if you don't ask for it, everybody wants to give you money. So make sure you manage your money correctly. Our business has changed from operating expense perspective. So all the marketing events are gone away, which was 20% of our operating expense budget because we were, trying to grow rapidly. So we are doing a lot of trade shows, a lot of regional shows. All those activities have obviously been postponed. So that's naturally added to our savings. All the travel expenses have gone down. So overall, my operating expenses declined by about 20% from the plan at the beginning of the year. And this is not because we, nothing to do with letting the people go or anything like that, but primarily, things that were costing a lot of money are off the table anyway. So that's, in a way, it's a good savings for us. But, one, absolutely make sure that you have enough cash. This could last a little longer, and you cannot run out of cash at the wrong time, because if you do that, then your company would be in more difficult times. Of course, your investors will support you if your technology and products are good, but it's not a good situation for the employees and so on. So you need to make sure that the cash flow is going to last and manage it properly.
And how long, Tushar?
So I'm prepared for end of 2021. So what I did was we went and secured a venture debt just to make sure that we have additional money. So we cut our burn rate. We are basically getting pretty close to break even, and we are added the venture debt. So combine all that, we have money through the end of 2021 and beyond. Before this pandemic, we were focused on growing at all costs. Let's grow faster. Let's invest more. Now we are going to optimize around the investments we have, and we think we can break even and be profitable. I know all startups may not be in that kind of a situation, depending on what stage of your company's growth is. But fundamentally, very important to do two things. One, obviously manage your cash and burn rate, and cannot run out of money at this time. So whatever action you need to take, you should take, and you should take it early, right? If you have to do layoff, do it sooner than later, because that way the money will last longer. And second, you must invest in R&D. So we are heavily investing in innovations. The engineering resources is the last thing on my list to reduce. If I look through my plan B and plan C, if this continues and the world and the climate becomes bad, what am I going to cut first, second, third, fourth, fifth? The last would be the engineering capacity, because that's our innovation engine, and that's really what fuels us. So far, we've been fortunate. The business is still coming through, and we are on track and ahead of the plan. We might have lost the upside or the real, ramp we were seeing because of these delays. But again, it's first manage your cash and focus on innovation, so that when you come out of this, you'll have value created for your company.
Yeah, some fantastic points, and I largely agree. I think on an investor perspective, just for everyone who's on the call, our recommendation for our companies is to have at least 12 months of cash. Ideally, you want to have a year and a half, potentially 2, and finding ways to fundraise, whether that be through venture debt, Tushar mentioned this, or other fundraising environments, is a good time. I think Tushar mentioned this point, but if people are willing to give you money, this is a good time to take cash. And this is a good time to have sufficient cash on hand so that you're able to weather the storm, however long it might last. I think this point on layoffs is a great one, which is you want to continue to invest in innovation, and cutting engineering resources would not be the ideal strategy. Obviously, you have to look at your business and understand where you are and try to factor in what level of cuts you should have. The one thing I would probably add to all the points Tushar mentioned is that if you are planning to do layoffs and you unfortunately have to make that decision, I would recommend that you do it in one go rather than having multiple layoffs. A good example, very public right now, of the way not to do it is the way that Uber has done it more recently, which is you have one set of layoffs, and then a week later you have another set of layoffs. It generally impacts morale pretty negatively, and what it results in is actually your best performers who you want to retain deciding to leave because they're thinking that there'll be 5 rounds of layoffs, and they don't want to be in a business where everyone's afraid of when they're going to be cut. So that's the one advice I would say. I would say definitely try to push to cut more than you might early on, so that you don't have to cut again, later on. So, with that topic, now let's move a little bit past the pandemic. In some regions, obviously Israel is a great example of this. I've been talking to some fantastic Israeli founders who are starting to go back to the office. And I'm super envious of them having that ability because we're still all stuck in our homes in the Bay Area. But I do want to turn it over to Erik and Hilik to talk a little bit about how return to work might look like. When do you expect this to happen if you guys are thinking about specific dates at Intuit and FICO? And then what are your thought processes around making sure that there is a sense of community while also maintaining the 6 feet of distance and some of the things we've discussed around social distancing in the workforce that will likely be the long-term impact of the pandemic. And Erik, maybe you should start on this point.
Yeah, I mean, we view this as a phased return to workplace, right? In the sense of, have we started thinking about it? Absolutely. And frankly, it's a lot more complex than leaving workplace, if you will, right? So it was very easy to tell people to go home and stay home and take what you need, right? So people took monitors, chairs, other things to make their office at home more efficient. But I think I don't know about the when. It obviously depends on the local geographies. As you said, in Israel, it's a little bit different. So we're looking to be very compliant, but we're also not in a hurry. So our ability to operate remotely has shown us that we can operate remotely. And accordingly, we're actually looking at our overall real estate strategy going forward. But in phase one, we're looking at maybe 10 to 15% of the on-site workforce returning. And again, I don't know when the date is, but I think it depends on when we're allowed to in that sense. And that first batch of folks will be those who volunteer to work from home. I mean, to work from the office, or for many reasons. Many folks are due to family situations, other things, small one-room apartments, whatever. It's not efficient for them, and they really their productivity is impacted by not working in the office. So we view that as phase one. Phase two would be probably up to 30 to 40%. And that will last several months as well as we kind of see how that happens. But I think the workplace will be very, very different. Obviously, there's checks on the way in, all of the logistics of doing that, self-certification of no fever, checking for that, planning all of those details with our physical security team is all well underway. But the overall density, getting back to 100%, I'm not sure that's ever realistic until there's a vaccine or some other way of basically having people feel comfortable with that, level of density that the office was designed for, actually. So, we just redid our San Diego site from a lot of individual offices to more open plan, right? And so, 6 feet from your neighbor is just barely there, right, in the new space. And so I just think, we will have a reduced density in our sites for the foreseeable future. But as far as how do we maintain collaboration, I think one of the things that is going to be hard to reuse is all of the conference rooms, right? So I think even if you have enough density protections around you, you're still going to be doing virtual meetings as opposed to all cramming into a conference room. And so same thing with the coffee areas, same thing for the elevators. These are all things that have to be thought through. And so it's pretty complex. And we have a whole team that is spending their entire time on return to workplace.
Thanks, Erik. Hilik.
So I don't have a lot to add here, I will plan to reopen each of our offices around the world is linked to local government orders. We already have a few offices that can be opened and are open to whomever is actually have the will to come back to work. So right now, due to where we are, the fact that for some continuing childcare priorities linked to the closed schools and personal or family health risk factors, may motivate a desire to continue working from home for some time. So, you know, we are actually leaving it to the employee decision, you know, to do whatever he feels comfortable with. And, you know, we will continue to reevaluate where we are, you know, based on where every authority is along the road. You know, we don't see a lot of productivity issues as well, you know, as just to echo what Erik said. But, you know, you see in different geographies, you know, put the US aside, you know, people are eager to go back to work. You know, you said earlier, Sid, something about, you know, you envy Israel while you stuck in your Bay Area house, right? So think about what you said, but you know, the thing is that we will leave it to the employees for time being. I think this is the responsible thing and the right thing to do. And we are good, you know, in terms of delivering our support to our clients across the board, and we will continue to do so for now remotely, and, you know, we will wait to see what happens next.
Yeah, great. I just want to mention in that respect, if anyone is interested, we are actually holding another webinar next week, which is about going back to the office in terms of liabilities of the employer. I know it's not about cybersecurity, but since you all mentioned that, so I wanted also to jump in and mention the fact that, and Erik said that you will leave it to the employees to make the decision whether they want to volunteer and come to the office or not, and the different measurements of, you know, how you're going to, and who you're going to allow and for how long and where they're going to sit and all of that. So if anyone is interested from the founders, or if you have anyone in administration in your office, and this is also for our audience, next week on the 27th, 10 o'clock in the morning, we will talk about what you have to do in case you want to allow people to go back to the office. So just as a side note.
Super helpful. And, you know, I am, as Hilik mentioned, I agree. I'm very envious of all the founders in Israel who are starting to go back. And connected to this point, you know, as we end here, and I want to thank everyone for joining. This one last question, something fun. You know, we are, unfortunately, all of us are in California and we're still in shelter in place, but what is the one thing you are most looking forward to doing, you know, once shelter in place orders are lifted? And maybe I'll start. You know, there's so many things. I'd love to get a haircut. I'd love to go and sit in a restaurant. But the one thing that coincidentally I'm so excited about is just being able to do my usual drive from San Francisco to Palo Alto on the 280. I really miss that drive, even though I used to hate the traffic. I mean, it was horrendous to sit in a car for that long. But I do miss the drive, the ability to not think about anything else and just drive and think about all the things that I need to, you know, do for the day was a lot of fun. So that's one thing I do miss. Tushar, maybe we'll go with you next.
Yeah, so look, as you know, I'm, you know, like to work out, and of course the local sports club is closed, so I miss that a lot. I've actually changed my routine. So what I do is I come to the office. I'm the only person in the office, so I'm safe. And then I take my calls while I'm walking outside in the parking lot. My goal is to do 5 miles per day of walk. So I'm getting enough calorie burn, but I'm missing my swimming. It's just the feeling of after swimming is just phenomenal. So look forward to getting back into the water one of these days.
Absolutely. Erik.
It's not so much the drive, but it's the break between, you know, home life and work life. It's that break of time. You know, it just all blends together working from home, right? And it's just very easy just to keep working, right? Until your spouse or your significant other comes in and says, "Hey, I'm hungry." So.
Hilik.
Easy, you know, shave every day, dress up, getting into my car, sitting in traffic while listening to music, you know? And Sid, I know that you didn't like the drive. Now everything has changed.
Yeah, you did. It's a great point. And Sharon, we will end with you.
Yes, I really envy to get some, I'll echo what Erik said and just get out and make that significant distinction between life, work, and everybody talk about life-work balance. We miss this balance. We miss the fact that we have life and we have work and we have commitments, and it's a big blend, and I don't know what day it is anymore. So I'm really looking forward to go back to normal, the normal we all knew. And with this, really, I want to thank Sid for taking the lead on this conversation, and of course to Erik from Intuit, Hilik from FICO, and Tushar from Attivo Network, all of you for your insight about cybersecurity, the prediction, the way your companies are looking into the situation, about what is out there for investors and also for startups, for entrepreneurs, and for companies. Thank you so much for spending the day with us. Again, this is being recorded, so the recording of this session will be available on our channel. And I hope to see all of you in person sometime soon. So really thank you, and have a wonderful rest of the day.
Thank you so much, everyone.
Okay. Thank you.